It's Tuesday the 6th of October, just coming up for 2 p.m. I'm going to do the morning review and subsequent trade results. I'm going to do it a bit different this week and also next week. This week I'm going to do the review on the Dow Jones Industrial Average. Now that opens at 2:30 p.m. UK time. Next week I'm going to do it on a Forex pair. This is just so I can show you that these methods are easily transferable between all different market types on the 5-minute time frame. So what I'm going to do now is I'm going to pause the video, put in all my levels, and then come back. Okay, so that's all of my levels inputted onto the Dow Jones now. Looks like a bit of a mash on the screen, but every line means something. I've got key daily levels, I've got pivot points, and I've got key areas from the previous day's price action. Now what we can see is the market has fallen away very strongly, and then it has been ranging. We've made a nice run up here, and we've run up into the close and the open of this candle right here on the daily time frame. So the market's sitting at 16,766 right now. So I've got a couple of key areas that I'm going to be watching today. Now with the Dow Jones, I trade the FTSE 100 on the 5-minute time frame most frequently. When I first started trading, I traded the Dow Jones, but I live in the UK, so trading between the hours of 2:30 and 9 p.m. it's not ideal. So I changed onto the FTSE. It's the exact same methods I use. The Dow Jones is a lot more volatile. It moves a lot further during any given day. So first thing would be the stops on the Dow Jones are much larger. It makes no difference. If you're risking 1% and your stop's larger, it's still 1%. It makes absolutely no difference to you. Now if you want to learn how to trade the 5-minute time frame, how to identify these zones, reversals, how to read the market, how to calculate your stops, money management, I'll leave a link to the training page in the description section of the video below. It's decisivetrading.usefedora.com. That'll teach you how to trade the 5-minute time frame. It's the exact same way that I do it. So the market it's up in this level right here. Now this is a very important level for me today on the Dow Jones. I want to see how the market reacts here. If I get strong sell signals, I would ride the market down. However, if the market can break out of here, I would expect a continuation of the rally higher, at least up into 16,930, potentially all the way up to 17,000. 17,000 will be a very strong resistance area. It's a round number 17,000. So I'm going to be watching here at the open. To be honest, I would expect some sort of a sell-off just because it's had such a strong run-up. I mean, you can see here it's ran up 1, 2, 3, 4. This is the weekend candle, so you ignore this. It's had 1, 2, 3, 4, 5 up days now. So let me just zoom back in. If the market does fall away, I've got another level down here. It's a key daily support and resistance level, which ties in with the pivot level. And I've not really got another zone until we get all the way down to 16,569. So once again, it's letting the market tell me what it wants to do. This will be the key area for me to read what the market is intending to do. If it rejects out of this area and falls away, I'm expecting the market to make a fairly significant fall. However, if it can break out of this zone and remain above it, then I'm expecting the market to continue its run all the way up into the 16,930 levels. So it opens at 2:30. I will come back at 9 p.m. and go over the market, go over the trade opportunities, and give you a breakdown. Okay, it's almost 10 past 9 UK time, which is almost 10 past 4 Eastern time. The Dow Jones is now closed. So let's go over it and I'll take you through exactly what happened today. First thing I want to highlight is the area which I pointed out earlier today. The reason I knew this was going to be a significant zone is because after this enormous fall off here, you can actually see the Dow Jones fell, just take it from here, it fell down over 2,300 points. So it was an enormous fall off. This is as low as it got, and then it has pushed higher. Now, on this press higher, on the bullish run, this candle right here is the highest point the market reached. However, the close of this candle matches up with the open of this candle, which then tried to push higher, failed, and then fell lower. The next day, the market fell off. So this told me that this area right here is a potential area where sellers and buyers are battling in the market. Now, the market then fell away and it pushed higher again. This very strong candle yesterday stopped and closed exactly on this zone. So for me, this meant today, if the market can press through here, I'd be looking for bullish trades. If it rejected underneath it, I'd be looking for bearish trades. So let's go on to the 5-minute time frame and I will take you through it. Now, the market opened at 2:30, which is this candle right here. It instantly pushed higher, broke through the zone. It didn't quite reach the next zone, which is the earliest I would have been interested in selling into this market. It turned around, it fell down, bounced higher, fell down again. You can see I've got my buy arrow here. This was the signal. I entered above the high of the candle. The market then went up 53 points. I only took 35 points, which was right here. I was expecting to get some resistance around about this area, around about this level. So I took 35 points. My stop for the day was 50 points. The market then turned around again, fell down, and you can see the zone once again acted as support. This was my signal candle, entered above the high. The market then pressed up, rejected, fell away, but it only fell away a little bit. This is a false break out of the zone. As I've already said, once it made this strong breakthrough, I was looking for buy signals. Got it here, entered above the high. It came down quite a bit actually, but it didn't come near my stop, which was 50 points. So you can see it came down 41 points. My stop was just down here. The market then pushed higher. It went up, let's see here, 43 points on the first leg. I only took for 20 points. As I've mentioned in other videos, I look for 2 good trades a day. If my stop is 50, that means that I'm risking 1% on 50 points. So for the day, I'm looking to make 50 points, 1% on my account, and that's me finished. So for the rest of the day, you can see the market remained above this zone. There's another buy signal there if you were still trading. And it closed at 9 o'clock. So it closed at the end of this candle. The close of this candle right here is the close of the market. Now, what is significant for me is that although the market has traded above this zone for the whole day, it's not really gone anywhere. This is quite a negative sign. You can see here, it's making lower highs. The market hasn't really gone anywhere. So although I was looking for buy signals here, overall for the market, currently this is relatively negative. Unless the market can break through here significantly and stay above here, it's fairly negative in the short term at least. So, as I've said, next week I'm going to do a Forex pair. It'll probably be the Australian dollar, US dollar for the review and the trades, just purely because it's a market that I trade quite often. I know it very well. It'll be on the 5-minute time frame again. As always, please do subscribe to Decisive Trading if you are learning how to trade. It's absolutely free, and I try and put up at least 2 training videos per week. And as I've already mentioned, if you are looking for training on how to trade the 5-minute time frame, it's the exact same across Forex and indexes. The website is decisivetrading.usefedora.com, and I will leave that in the description section below. I'm James Orr. Thank you.